18 months ago, were dwindling. They were dwindling because of pressure in the European market. They were dwindling because what was happening to the Indian market and how challenges had emerged for some of the products post the price erosion. But Sun Pharma and Cipla, this is classic. These two classic bellwether stocks have made a roaring comeback. Sun Pharma hit a record high a couple of days ago. Cipla has been making new highs for last couple of months. So what has really changed for Cipla and for Sun Pharma? What have they done so right which Lupin and Aurobindo Pharma have failed to do? They're both different companies, different portfolio positioning, different markets, but the fact that Cipla and Sun Pharma have hit a new high pretty much at the same time, it just tells you the power of some of these great franchises. Let's take that conversation forward with Nithya Balasubramanian, Director Healthcare with Sanford and Bernstein. Nithya, good morning. Thank you for joining us. Two different pharma companies, two different models, two different promoters, but the coincidence here is that they made a new high pretty much at the same time.
Yes, I think both of these have done fairly well compared to the larger index as well as the rest of the pharma sectors. So, and I think we have to go back about a decade when most companies were doing well in the US, and then suddenly around 2015, 2016 is when we saw significant distributor consolidation, significant increase in competitive intensity, and both companies actually reacted very differently. And some of the choices that were made at that point of time is what we see as playing out now positively for these two companies. For Sun Pharma, it was a step up in investments in the specialty space. They picked up a bunch of assets, Illumia, Sequoia, and more recently Winlevi, which seems to be doing well in the market. We do see consistent growth in these assets in the US. These are obviously more durable type of assets in the US market compared to the commodity generic business. So for Sun, I think this step away, this capital allocation into US specialty is now bearing fruit. And for Cipla, at that same time is when they started pivoting towards more complex generics. Everybody else has been working on complex generics as well, but at least now it seems like the traction in Cipla's portfolio is better. Respiratory generics is something where they have niche capabilities, and more recently, we are seeing lots of traction in some of their complex injectable filings as well. I think what differentiates these two companies, therefore, is one for Sun, the capital allocation into US specialty, which again was a completely uncharted territory for Indian companies. And for Cipla, I think the razor sharp focus on some niche technologies like respiratory and peptide injectables is what is now turning around the US growth story compared to some of their peers in the industry. And I think we should not forget the fact that both these companies also are seeing a lot of support from the India domestic market, where both of these are market leaders. And in the recent past, we do see Sun again investing quite heavily. They've put down a lot of reps on the ground. Cipla similarly is investing in India. We have seen a lot of growth come from chronic therapies, trade generics, etc. So while we talk a lot about the US, I think India has also given a lot of support to these two companies.
Nithya, Sun Pharma is trading at about 24, 25 times 1 year forward. Cipla is trading at 26, 27 times 1 year forward. So if you have to choose on valuation, it's pretty much even Steven. But for an investor's choice to only buy one and only one stock, which is a better one?
See, I think there are two different names. You get different types of exposure with these two companies. I don't think it's an apple to apple comparison. See, with Cipla, I think the near term traction seems pretty strong. It does seem like they've got about 10, 12 complex generic assets in the US, all of which are likely to be material. And you'll possibly see one or two of these come through almost every quarter for the next 3-4 years. Right? However, the challenge with Cipla is that it is still generics at the end of the day. And therefore, we're today sitting here today, our visibility into what will support their growth, let's say in the FY 26, 27 timeframe, is actually lower. And Cipla, if these assets play out the way as we are imagining, Cipla will also be $1 billion organization in the US at some point of time. And therefore will again have a fair amount of base erosion to contend with, let's say 3 or 4 years from now. So therefore, that is one thing to watch out for in terms of Cipla. For Sun, of course, they're investing in a bit more durable business, which is US specialty, and it's very similar to a branded generic business, right? You've got longevity, your products have patent exclusivity, you have pricing power, your margin profile is pretty stable and strong. So therefore, you're getting a different kind of exposure with Sun. But with Sun as well, I would say, given that most of their R&D today, internal R&D today, is not enough to support their existing pipeline, they will have to continue to do BD and M&A and licensing to access more of these branded assets in the near term. So if you look at our estimates, we do see their specialty growth is starting to slow down a little bit in the FY26 timeframe, when competing products will actually see biosimilar competition. So Illumia, for example, will see some competition from Stelara biosimilars. At that point of time, again, Sun will need something else which can support growth. But again, our visibility into what that something else is do, right? It depends on what assets Sun Pharma even thinks of buying and what type of deal that they end up striking, and at what point of time the product might show up in the market. So I would say there is room in both. But however, the exposure you're getting is slightly different when it comes to the US market. You're really making a play for Sun's ability to continue to build their specialty portfolio. In Cipla, on the other hand, you're actually making a bet that they've figured out one bunch of complex generics. Maybe there is another one that'll play out in the medium term. So not really apples to apples, but we like both.
Okay, right. But outside of the list of Sun Pharma, Cipla, Nithya, where is it that you're seeing some potential, where you sort of see those names getting to the conviction list?